Hello everybody, and thank you for joining me today. My name is Gabriel Brent, and we're going to do another Zones Foundation class today. So let's go ahead and get started here. Basically, what we're going to be starting with and talking about is trend, zones, diamonds, price action, all the above. Okay, we're going to be putting it all together. All right. And what that looks like and how we can do that consistently every single day with the software that we have, all right? And just basic reading of the bars, all right? So let's go ahead and get started. I'm going to be looking at the APA methods package here, okay, or methodologies as it's listed here on this one. Now, we do have versions in NinjaTrader and CR Charts, TradeStation, a few different versions. And I think the important thing is that throughout all the different platforms that we keep everything the same. Now, personally, I like NinjaTrader a lot. And it's just easy to write code in for me, and it has what I need to make things quickly. Okay. The other platforms are great too. Every platform has its strengths and weaknesses, but this is a platform that I prefer. Okay. So I'm just going to be sharing it with you on the NinjaTrader version here today. And again, we're looking for consistency. We want to make sure that everything is lining up so that what you see on your chart is exactly what I see on my chart, and vice versa. We don't need any of this repainting or shenanigans that goes on, or who knows what, you know. We want everything very, very direct and simple and easy to follow. Okay, so first off, I'm going to start off with a little bit of the zone colors. And what we're doing here is, we're looking at when a zone is brand new and fresh. It starts off with these colors. And the colors, I think, are important because they help me instantly rank support and resistance. We're in supply and demand. The more times the level gets hit, usually the weaker and weaker it is. But that is only true in the case of, how should I put this? In the general case, okay? We are not looking at trend when we say it gets weaker and weaker, okay? Now, when we look at trend in relationship with the zones, we should see, for the most part, support zones or demand zones being respected in an uptrend, and in a downtrend, resistance zones or supply zones. So pick your vocabulary there, okay? Now, there is a difference in between support and resistance and supply and demand, and it is really, really important to understand this because time frame makes all the difference. All right, so supply and demand I view as being our bigger time frame zones. All right, and the APA methodologies or methods, this is support and resistance, and this software is only to be used on your entry chart, not to be used on any other time frame. Okay, so if you're using 15-minute, 60-minute level, 4-hour time frame to be entering on, use it on that time frame. Do a 1-minute time frame. It doesn't depend. It doesn't matter what your entry time frame is. It's just for that entry time frame. Now, the other thing that we built in here, we actually have several indicators built into one with the APA methodologies. We also have the time piece built into it. Okay, so we're able to identify the tops and the bottoms of the hour, as well as that first 15 minutes, which is in green. Okay, and that's what that does. All right. Now, we can filter price action, and when price action confirms a level, based upon these three little on and off switches. Okay, and basically it is up to you whether or not you want to see the confirmation of these levels filtered at the time of day only, or just whenever they happen, they plot. If you choose not to filter them during the time of day, you're going to see a lot more little diamonds because, again, the methodologies is used on your entry time frame. Your entry time frame is always support and resistance, okay? You know how we talk a lot about things being relative and supply and demand shifting over time and yada, yada, yada. Well, support and resistance, supply and demand is also relative based upon the time frames that you're using. If you're swing trading, you know, your supply and demand may be off of a monthly or off of a weekly, monthly chart, and maybe your entry chart is off of a daily, you know? So your daily chart is support and resistance. And in case for a day trader, support and resistance is maybe off of a 1 minute chart, okay? It changes based on scale and what you're trying to do overall, okay? And obviously for a day trader, a daily chart is, that's huge. I could care less about a daily chart being a day trader, you know? But when I move up to swing trading, oh man, that daily chart is everything, you know? Like that is an important chart. So just realize that support and resistance, supply and demand shift just like time frames, you know? So keep it simple. We can filter all that stuff with the time of day. Now, this time filter is also only used for the small minute time frames or like tick or range charts, volume charts, I don't know, some of those weird exotic charts that you can load into the different platforms, but pretty much on the small scale. Okay, we really don't want to be going above like a 5-minute time frame with this, just because all it does is it highlights the tops and the bottoms of the hour. Okay, so why is that important? Well, if you're day trading, what this allows me to do is it allows me to concentrate only for this period of time. For the first 15 minutes, I'm only interested in that, you know. If something doesn't happen there, then no big deal. I'm only interested in that period of time. If my signals don't happen during that period of time, oh well, you know, that's okay. Life goes on. But what I've come to find out is a lot of times during these times of day, the big moves or the major reversals or the major retracements will happen during these times of day. Okay, we saw a brand new high during this time of day and a nice little pullback, you know. So that's interesting to me. We saw a brand new high. Now what's going to happen at the next bottom of the hour here? I don't know, but maybe we'll see price failing to break this new high, and maybe this is the high of the day. It could happen. The markets can do anything. Our job is just to be good risk managers, okay? So this is how the methods helps us be good risk managers, all right? As we look at the zones, I'm just showing you the current levels only. I can show you all the levels. This is all the support and resistance on this time frame, okay? That is what it's showing you. That is all right? You will see bounces, money bounces. Whenever an aqua zone turns blue, I consider that a money bounce. So, you know, money bounce there, money bounce there. You know, money bounce was in here somewhere for that zone. You know, we're just looking at very, very simple conditions and simple ways of measuring, hey, this is a relatively low area. Price says that it's failed to do something here. And then we say, well, if prices told me that it's not going to go any lower, then what can I do? Well, I can take it in the opposite direction. Is that opposite direction with trend or not? Yes or no? And it breaks it down into very, very simple, logical steps. That's all I'm trying to do. You know, I come from a programming background. I need simple, I need logical. It needs to be true or false. Now, it can be a complicated true or false. Like we may have 20, 30 different conditions sitting on something, but let me worry about those crazy conditions in the background, and we don't need to stress out about it, you know. So when we're looking at this type of thing, what I'm looking for is this very, very simple price action, making these little diamonds, okay? So let's go look at one of these diamonds here that's currently filtered. And again, this is filtered with the time of day. So in order to see what the zones look like at the time of day when these things were formed, I'm going to turn on the dead zones, or the inactive zones, if you will. Again, all this stuff is support and resistance, okay? So, we'll see a lot of times price come up to a level and turn around, and give a little retracement. Price might just barely peak inside of a level and then turn around. And you know what? That's all we need. We just need one bounce on a level. That's all we're looking for. Anything beyond that, that's great. That's awesome. And the little bounce could just be one little candle coming up here. I mean, this is support and resistance. It's nothing major, okay? Don't go betting the farm on one single zone on your entry time frame. It's probably not a good idea. And I love to wait for confirmation. Love to wait for confirmation. Let price bounce off the level. This one just barely kissed it, and then it started to roll off. Let price roll off of these levels before we are getting into things. And I like to take them in the direction of trend. Yes, you can look at the counter trend play, but make sure that you have enough stuff going along with that counter trend type of idea. Okay, so the zones, before we get into all that other stuff that confirms like a counter trend idea, let's just look at the simple bounce. Okay, what does this represent? How do we take this? How do these diamonds draw here? Well, the diamonds draw based upon price coming into the level, and basically a green bar or like a doji coming into a level, okay, and then we see an engulfing red bar, boom, okay, or maybe it takes a couple bars to engulf. We want to see price do this quickly, so it needs to happen within a couple bars. If it doesn't happen within a couple bars, like right now we just saw something right here, boom, all right, a green bar engulfed a doji, we got a little diamond, bang, right? So when we see this stuff happen in real time, there's no magic here per se, like it's very simple price action. Is this with trend? Is this counter trend? Do I have enough on this trade? If I measure out my risk to reward with my little ruler tool here, and look at that Y value, do I have enough risk to reward to be saying, okay, I can trade this as soon as it breaks up there, and I can, take it back up to that high? Is that a good trade? Yes or no? Risking 6 to make 5 gets me in with the trend. Is that doable? Is that logical? Am I going to be doing that right? What if I use the bottom of the zone down here? Now I'm risking 8 to, let's say, make 5. Is that more appropriate, or is that slightly inverted? Yes, it is slightly inverted, but we have to define how we want to do this. I personally like just kind of taking it just below the pivot by a tick, because a lot of these diamonds will form right around the pivots. So yes, it's a small pivot to use, but hey, it's 4 ticks to make 5 ticks, something like that. It gets you in the direction of trend, or maybe you're doing a counter trend trade and you have enough logic behind you to say price is going to, or price has stopped doing something up here, and I'm going to take it in the opposite direction. Maybe that's the case, So just be aware of what this stuff is representing, and this is how the software works. It's very, very simple ideas of just using price action, because when it comes down to it, all these zones they're just helping us find support and resistance, okay, on the small entry time frame with the methods, okay, and with these diamonds that are confirming price. If we take off the time of day, okay, we're going to see this happen all over the place. Price is going to be confirming zones all over the place. And if you don't have a direction of trend, like, it's going to be crazy, you know? Like, oh, I actually hit the wrong one. Sorry about that. It's going to be absolutely crazy how many diamonds there are, you know? And we need to use a little bit of a filter of trend to help us with that, okay? So that's what the methodologies software does. The Elite software does some other cool, interesting things with these concepts in mind, but that's another video, okay? So now you can see some of these other confirmations of price action here, all right, that didn't happen during the time of day. And yes, there's definitely going to be bounces that aren't at the time of day. It's just the way that it happens, all right? So that is really what the methods does. It is for your entry charts, whether you're day trading or swing trading or long-term investing. That's what the software does. We can apply it to all different time frames that you can get into your platforms. With TD-ameritrade, we can do stocks and ETFs through NinjaTrader. But the other platforms have their own brokerages and things of that nature. But NinjaTrader just happens to be special that it plugs into TD like that. So I think that's pretty cool for all you stock traders out there. So just want to thank everybody for joining me today and for watching, and we will see you in the next video.